Hello everyone, my name is Naskrallo, welcome back to my YouTube channel and straight into the Bitcoin content. Guys, we're seeing a big pump in Bitcoin right now, and a lot of people are sending me messages on social media saying that Thomas, should we long it? And the answer is not yet. Watch this video from the beginning and until the end. There is big pain happening right now in the market, and I'm gearing up for my new trade. But for you to understand it, you need to watch this video from the beginning and until the end, and if you will do so, you will make money by the end of today. So I'm going to show you exactly my trade setup, my logic at what I'm personally looking at, because right now, guys and girls, we're seeing huge pain in the market. Let's be honest. Right now, New York Governor Hochul signs a moratorium on proof of work mining. So it will impose a 2-year moratorium on new permits for proof of work crypto miners that rely on carbon-based fuel. So this is, kind of weird, because I think, let me know in the comments if you think that this is a conspiracy, because it's actually imposing a moratorium on new permits. So all the boys that are mining right now, they'll just keep mining. So is this just an in-house job, another conspiracy theory? We really don't know. And it's also going to contribute to a slight reduction in supply of Bitcoin, because less people are going to be mining it because they cannot actually get a permit for it. So this is very interesting, because before they couldn't do it, as it says in the article here, they couldn't do it before because of huge lobbying that was going on. So and right now it actually untied their hands, this whole FTX collapse thing. Also, if we're going to take a look, and this is also something interesting you could pay attention to, that right now you can get mining hardware for like dirt cheap. So if you're into mining, this is the time to start investing in it. But again, we've spoken about the miners in a previous video. If you haven't seen my previous video, check it out. I'm going to link it up here. Very important video as well. Now, the next one is also, again, max pain right now. US senators are urging Fidelity to stop offering Bitcoin in 401ks in the United States, and its plans citing FTX collapse and serious problems in crypto industry. The thing is that, looks like a traditional Karen. Look at her. I mean, let me know in the comments if you think that this is a traditional looking Karen. So the thing is right here that what I personally think that, Department of Labor, they're saying that it's unsuitable for most retirement savers. But the thing is, why are they deciding for people? What do people want? If somebody wants to participate in the future of the economy, of the financial world, and have a tiny bit of Bitcoin in their retirement savings, why? What's the problem? It's not like, they're forcing them to. So this is free will. United States is supposed to be about free choice and democracy. And it's not. Like, look at this. This is ridiculous. They're deciding for you. So I really don't agree with this at all. And guys and girls, before we continue, remember that if you want to become one of my students, then there is a Black Friday offer on the table right now. There is a link down in the description of this video, as well as in the pinned comment, where you can become one of my students at my 5 months long certified trading learning programs, where you learn everything from active trading to long-term investing in the world of futures, crypto, stocks, forex, etc. And right now you can do it for a super mega limited time for this Black Friday with an 80% discount. So go down below and become one of my students today, and I'll see you at the lessons. Okay, so this is, this is just screaming max pain in my opinion. Now the next thing is huge, and you have to prepare your minds for this, because what Glassnode has actually put out is the article about the uncertainty among all the whales and old hands. And this is quite painful, quite honestly. So let's just go through this. I marked all the most important stuff for you guys and girls, and call me Mr. Spot On down in the comments. And also join my free Discord channel. There is a link down in the description of this video, as well as in the pinned comment. It's an 18,000 trader strong community. There's free to join to see all of our trades and basically communicate with like-minded traders, etc. So if you're not part of it, you're not making money. Go down in the description of this video, as well as in the pinned comment, and join us right now. And back to Glassnode. So here, this is the chart that is interesting for us. It's called Bitcoin Exchange Mean Inflow Volume by Exchange. So it says here that a trend which can be observed during the later stages of the 2018 and 19 bear market is an aggregate increase in the mean inflow volume to exchanges. So in other words, the average deposit size across all major exchanges increases in USD terms as the market formed a cycle bottom. This is present across all major exchanges, including Binance, Bitfinex, Coinbase, Gemini, etc. A similar trend has been in effect since May following the collapse of Luna UST project. This indicates that in general, there has been a net increase in larger sized deposits over the last 6 months. And this in turn indicates that entities such as whales, institutions, and trading firms had a larger dominance across exchange deposits. So they were actually buying in and sending more money to actually buy the dip, so to speak. And this seems fine. However, right now, as we are seeing right here with spot prices currently at $16,200, this is the first time since March 2020 that this whale cohort has been at an unrealized loss. So all these whales are currently, actually, they've been buying the dip, and right now they're sitting at a loss. In response, whales have actually been depositing coins to exchanges to maybe start distributing. So it starts to shake up the whales as well, and all the strong hands to be. This is scary. That's why I'm saying max pain, and watch this video till the end. You're going to be very surprised, and the trade set I'm going to show you is going to be quite crazy because something very important is happening today. And with an excess of between 5 to 7 Bitcoin per day in net inflows over the past week. So, and this is this orange line right here, and so this is like basically the zero loss for the whales and the long-term hodler cohort. So, and here we're gonna see that we're dipping below it. So this is, again, if this is not max pain, I don't know what is. With one of the largest spikes in realized loss in 20 to 22 cycle, a peak daily value of about minus 1.5 billion in realized loss was locked in this week, ranking as the 4th largest in history. So let's take a look. Realized profit on loss, and right now we have one of the biggest realized losses in history, also screaming max pain. Now the worst is yet to come. So here's the worst, that old hands are awakening, and usually during bear markets, significant and sustained upticks in altcoin spending is often a signal of reduced conviction, fear, and capitulation among this more experienced cohort. And usually this what I'm trying to say here is that usually this cohort, when this starts to awaken, this is literally the end. This is literally the worst that can be, because this, everybody else by this time usually is already shaken out when these hands actually start to show up. So here in this chart, we're gonna see a 3 months old Bitcoin awakening. Also here we're gonna see a huge spike in 6 months old Bitcoin also awakening here in December 2018, this being like massive spike. But right now this is still a huge spike nonetheless, and usually oftentimes this was signaling very important market shifts, so to speak. So if we're gonna go further into this, we're gonna also see quite a few interesting things, but we've discussed the most important one when it comes to Glassnode, and we're gonna move on to some very important stuff in just a second. And right now what we are seeing is that long-term hodlers, statistically, they are least likely to spend in the face of volatility. So this supports the narrative that I just said. And their supply has declined by 84,000 Bitcoin after the FTX situation, and it exceeded 100,000 Bitcoin in 3 back-to-back months. So this is like, but of course, this sounds bad, right? Guys, of course, sounds bad. But here is a chart. And I mean, tell me in the comments, does it really look that bad? Because total supply held by long-term holders. So certainly we had this Luna, 100 Bitcoin, 1,000 Bitcoin sell-off, June sell-off, 143,000 Bitcoin, July rally. Also before it was minus 119 Bitcoin in this rally right here. And right now we have a drop of 84,000 Bitcoin right here. Yeah, but I mean, how about this? I mean, does it look really that bad? 84,000 Bitcoin is bad, but I mean, in relation to the whole chart, I mean, it's not really looking that bad. But in conclusion, that Glassnode concludes here is that it becomes increasingly possible that a wider scale reduction in confidence is at play. So they're not saying it here directly, but what they're trying to imply is this is mass capitulation. So, and what this means, hang on, I'm almost there. So watch this video till the end. So here is something that is actually the opposite. And I'm going to be getting to the whole point, that crypto winter might not be as cold, because Coinbase Survey shows that 62% of investors are actually increasing their allocations over the last 12 months. So here we're going to see that the Coinbase Survey found that crypto winter might not be as cold as expected. That because usually, we're seeing this kind of, conviction is going down, but at the same time, when it comes to investors, again, big fish, everybody who is from the world of smart money, etc., the survey has showed that 62% of investors who are currently invested in crypto increased their allocation. So they put in more money in the last 12 months compared to 12% who actually decreased their allocation. And looking ahead, 58% of investors expect to increase their allocation over the next 3 years. So this means that we still have very strong hands in there. That's number one. And number two, that potentially we're seeing mass capitulation. And today is going to be potentially a deciding day as to whether we're going to break out to the upside or to the downside. We're going to get into the chart in just a second. Just quickly, guys and girls, remember, if you want to be trading actively and taking all the trades that we're posting in Discord, number one, join the Discord. And number two, there is a link down in the description of this video as well as in the pinned comment to BitGet. And with BitGet, you're going to get up to 10% cash back on your trading fees, which is going to show up like this in your wallet, on your spot wallet, on every single trade that you're taking, which is incredible. So even if you're a break-even trader, if you use my link down below and get this rebate system, you'll make money at the end of the day. Also, you'll get 10 USDT for simply signing up, and also up to $8,000 in initial deposit bonuses. And also, if you'll deposit $2,000 today from any one of those exchanges that are currently under threat, that's the best thing to do, because BitGet, I trust BitGet, and you'll get $200 within 24 hours immediately credited to your account. So join BitGet right now, link down in the description of this video. So let's move on to the catalyst of today, and this is going to be the jobless claims. So this is very important. Why? Because it's going to affect what Federal Reserve is actually going to do with their interest rates. So last time, which was on November the 17th, we actually saw a reduction. So it's like giving the Fed all the room to actually keep tightening. So we really want to see what's going to happen today. It's going to happen at 8:30 a.m. Eastern time. You really don't want to miss this. The forecast is again 225,000. So if it's going to be less, then it's going to be quite bearish. If it's going to be, because Fed can keep tightening, but if it's going to be more than 225,000, because we've seen so many layoffs in tech sector and other companies are going to follow suit as well. So that's going to be very bullish, because it's going to support the narrative that the Fed is going to increase the interest rates in December by only 0.5, so 50 basis points instead of 75 basis points, which is going to signal the pivot, and the markets are going to really rally. So now for this, let's go to the chart and let's take a look, number one, at the mass capitulation that we are talking about, and that is going to be the volume. It depends on the chart you're looking at. This is Coinbase, but look at this volume in this weekly candle, this drop right here that we've seen just now. This volume is actually, let's actually compare it. This volume is bigger, look at it, it's bigger than the capitulation of the COVID crash. This is insane. This is pretty crazy. If you're going to go to this chart, which is the TradingView index, then you're going to see a very similar situation, eerily similar, but just a tiny bit less of volume in comparison to the COVID crash. But nonetheless, so this is when everybody just goes, we sell. And this, all the weakest hands get shaken out. And remember that the biggest volumes come in at the bottoms. Just like we've seen the biggest volume come in, it was pretty much like this candle right here. It was pretty much the bottom. And we're seeing much more volume here than we seen at the bottom at the last capitulation event of 2018. So this is quite bullish, guys and girls. That's why we're saying like max pain is right now, is right here. So if we're going to go to a smaller time frame, let's turn off the volume for the time being. And right now we actually saw an interesting small rally right here of about 7% in Bitcoin. And the thing is, quite frankly, that we really, as I said, we really want to see what's going to happen with jobless claims. This could be a very important catalyst. And if we're going to be breaking above and stabilizing and closing in the 4-hour chart, and again, join our Discord channel. If we're going to be taking this trade, we're going to post it in there as well. So if we're going to be breaking this resistance, this has been very important for us with some close, with some volume, then it's actually going to open up the road all the way to for the first take profit at about 17,500, and the initial real target of this breakout, just simple measurement, at about $18,500. This would be a target for this breakout. This is something that I would be personally taking, again, with reading this whole narrative and this mass capitulation, that potentially at some point we'll see the moment when there isn't going to be enough people to keep selling Bitcoin, so to speak. But certainly if we're going to see a massive rejection right here, just because of jobless claims going to come in very low, and this is going to signalize that Fed can keep tightening, then we could see a rejection right here, and this could increase this momentum to the downside potentially. So we're actually right now at crossroads and waiting for what's going to happen at 8:30 a.m. Eastern time in US with this jobless claims report. So pay attention to it, and remember this breakout, wait for it, take the trade, use proper risk and money management, join our Discord channel, and take a look at this tutorial on how to trade on BitGet, how to do it in a smart way, how to use proper contracts, proper risk and money management. As always, call me Mr. Spot on down in the comments, and stay smart, stay rich, and I'll see you in the next video. Bye bye.